Welcome, everybody. Glad you're coming on the show today. Glad you're listening. Glad to have you with you, and thank you for taking the Sunday to spend with us. I'm Ray Smith with my wife, Sandra Johnson, and our guest host, John McClain. Hi, say hi, everybody.
Hey.
Hi.
On our show today, we have John Spur, the owner of Inspired Life Mortgage, and later on the show, we will have Tiana Kennedy, who is the Public Relations and Development Director for Gap Ministry. Can't wait to talk to her. But right now, we got John on here. And John, we're going to go straight into the mortgage stuff. So starting off with the fact that things change. And this is why you got to have a conversation with your lender often.
Yeah, if you're in the market right now looking for a home and you need to be working with a lender that you talk to and communicate with on a regular basis. And when you say things change, I've been comparing the current market we're in to 1981, which had a giant spike in rates. And a few months later, we had a drop.
Right.
Well, in the last 2 weeks, we've had the single largest drop in mortgage rates that we've had in 41 years.
You hear that, everyone?
Single largest drop in mortgage rates that we've had in 41 years.
I feel like we should all be cheering right now.
I don't know why that's in the background.
There's not sort of like a crowd always going on, right?
Yeah.
In one single day, rates dropped 0.5%. And what's really ironic about this was just like, I don't know, dumb luck on my part. The day before, I had done a presentation for a group of people comparing the current market we're in to 1981 and giant rate spike. And I go, it might be tomorrow, it might be 6 weeks, but we're going to see a giant drop. I woke up the next morning, rates dropped 0.5%. Now that's just pure dumb luck. I don't have a crystal ball, but hey, if you're better to be lucky than good, right?
Yeah,
right.
sometimes.
I hope you followed up with everyone in the class and said, "Did you see I was right?"
A lot of them in there were financially savvy and watched the news, and my phone blew up with text messages.
Nice.
It was great. So, but yeah, no, things change significantly, and I think one thing we as a group on the show have been talking about 2-1 buy downs, 3-1 buy downs for several months.
Yeah.
Mm-hmm.
And I think the rest of the industry finally caught up to this whole concept of 2-1, 3-1 buy downs. Well, when rates were 7.5%, that was relevant. They're not 7.5% now. They're mid to low fives. At least I can get mid to low fives.
Right.
Just do a permanent buy down. Let's buy it down to 4.25. It's going to be a couple years before we hit 4.25 again. Why do a buy down for 1 year and then another year and your rate slowly goes up? If we can get you into low to mid fives, let's use that money that the seller's willing to give for that temporary buy down and do a permanent, get you into high fours.
With that being said, how much would that come out of the buyer's pocket?
It's going to really depend on their loan amount because buy downs are always a percentage of the loan amount. But you're probably looking at about 1.5% of the loan amount to get into that range, which is, I mean, cheap money. If you can get into the fours, it's going to be a while before we see fours again.
Okay.
Yeah, I think it's a great option. And Raymond, you asked about it coming out of the buyer's pocket, but that could come as a seller contribution as well.
Absolutely. I mean, every contract that comes through now has a seller contribution on it. And it's funny saying that because a year ago, every contract that came through, I was worried that the home wouldn't appraise.
Right. This has been a market where, you can't go on vacation for 2 weeks and come back and pick up where you left off.
No.
Well, I mean, we're all old school. This is like a G-ticket ride at Disneyland.
I agreed.
I would have to say so. So we have a client that's looking right now, and some of the listings are mentioning that 2-1 buy down. And that's the conversation we're going to be having today is when that listing went into MLS, that was probably a great option. But now that it's been in there for a few weeks, it's no longer the best option for this client. So, again, we just can't say enough how important it is to have a great relationship with your lender. And it's important for us as well.
Right.
That we're in good communication with the lender because that's not in our lane. And so we rely on you, John, to keep us abreast of what's going on in the market and to make sure that we're getting that offer written in such a way that our client's going to benefit the most.
Wouldn't you think that having great partners is the reason why we do this? I mean, the fact that we have a good partner, someone that we can deal with, we know that our communication we're on the same page. And when things like this come up, we don't hear about it 2 months later. Like this 2-1 buy down, we were hearing about it. We were talking about it on a radio show for a while. And then I started seeing everybody else talking about it, like, oh, thanks for coming around. But now things have changed, and we're right again. We're at the beginning. We're at the precipice. We're right at the beginning of the stuff. Starting again. This is what you should be doing. So we always have to be ready to relay this information to our customers.
Yeah, and actually, John McClain, you've been seeing this as a consumer, and we weren't even talking really this kind of language when you were buying, and it's only been a couple months ago.
Mm-hmm. Yeah. And we were just talking about this, or we're going to talk about this on our show. Yeah. Whereas, when me and when I got with you guys and I got with John, and we initially started looking for houses in July, I said I didn't want to start looking in October, and he said I should have started getting ready in January.
Yeah.
Right.
So I mean, that's definitely that's advice we extend to people that are looking now that are saying, okay, I want to wait a little while until things cool down or whatever reason. Even if you do, quote unquote, want to wait a little while, start getting your stuff together now, because there's a lot that goes along with the process than just looking for a house.
What is the saying that luck is preparedness meeting opportunity?
Yeah.
And really, I think that applies here. You want to be prepared, and then when that opportunity comes, you may shift a little with the market, but you're prepared, and you can take advantage of those opportunities.
30 years of experience helps. I've been through these up and downs. I have a good idea what to expect. I've had many years of looking at mortgage history and real estate history, and that all gives me an edge to where, again, I don't have a crystal ball, but I can kind of predict and get a good idea of where things are going to go and what the next viable product's going to be, so we can stay ahead of the curve.
I think, to me, it's options. You always come with options, and people don't seem to realize that sometimes the first response is the first response, but after something else happened, here are other ways you can accomplish this.
You brought this up before, and I'm going to say the same thing I did before. Ray, do you like being told what to do?
No, I do not.
Absolutely.
I can tell you that is 100% true. Not that I ever tell him what to do.
We go to a restaurant and we open up a menu and we expect choices, right? If you walk into a restaurant, you open up the menu and it tells you you're going to have dry chicken, dry potatoes, and a crappy salad, you're not happy.
Right.
And I just look at it from that standpoint. Everybody's mortgage needs are unique, and there's going to be unique options for them. And so it takes a little bit more time for me, but I'd rather give you all the options that are on the table so that we can figure out what fits your unique financial needs.
Uh-huh.
And I think not only are you looking at different products, but depending on what my goals are, am I going to be in the house for 2 years? Am I going to be there for 4 years? All that is something that you're taking into account, and you take the time to work with that client and make sure that the end goal is in mind as well.
And do you have that conversation with them? How long you plan on being in the home? Is that something that comes up?
I have a series of questions, and they're not written out anymore. Jenna sits in the office, and she, if she were here, she would tell you that every time I talk to somebody, she goes, it's the same order, it's the same question every time. And yes, one of them is how long do you plan on living in the house?
Okay.
What are your future plans? This is your forever home. I spend a lot of time asking questions, pointed questions, and then listening and building a picture, and then go back and offer options.
Awesome. When we come back from the break, let's talk about some of the loan limits have changed and another change in our market. Let's talk about that. And
if you're looking to buy or sell your home and you have any questions concerning real estate, we would love to help you. Please call the Johnson Smith team at 520-850-1725 or 520-904-7711. We're here with John Spur of Inspired Life Mortgage, and we'll be back on the other side to continue talking about mortgage information. So thanks a lot for listening. Talk to you soon.
You are John Inspired, John Spur.
Thanks for staying with us, and we are here. You're welcome back to the I Am Real Estate Show with John, Ray, and Sandra, and we also have John Spur, who is the owner of Inspired Life Mortgage. And let's get back to talking a bit about rates. You were saying something about limits.
Yeah, no, the loan limits. All of our fun 3-letter and 4-letter government agencies out there have decided that they are going to increase conforming loan limits. And so what that means is, if you are over a certain dollar amount on your loan amount, now that number is $726,200. If you're over that for your loan amount, you would have to go into what's called a jumbo loan, and requires more down payment, higher interest rates, tougher underwriting, so on and so forth. This is a fairly significant increase, especially for the Tucson marketplace, because if you are doing 20% down, you can darn near buy $1 million home now and still be in a conforming product and get those great low conforming rates. The other thing this has done for us is it's brought the FHA loan limit to $435,720, which basically means you can go use FHA financing, 3.5% down, and buy a $440,000 house. Now, this is dating myself, but when I first got in the mortgage industry, the FHA loan limit was $97,000. So, I mean, but I think that's huge for Tucson for the 435 FHA loan limit.
Yeah, I don't think we see a lot of FHA buyers qualifying necessarily for that $400,000+ house. Are you seeing that come across your desk?
I use FHA as a tool. I don't use it as, does this particular borrower fit into FHA financing? I use FHA as a tool. Does this make more sense than putting you in a conventional loan?
Okay.
I have people come to me all the time for a conventional loan with 5% down that qualify for $400,000 loan, but their credit score is so bad that their mortgage insurance is ridiculously high and their rate is high. FHA doesn't have the same loan level pricing adjustments for those lower credit scores, and their MI is not credit score driven. MI is the same for every FHA buyer. And so I look at FHA as a tool. And so, yes, I do put people in FHA loans at the higher loan amounts because it's the right product for them at the time.
When we do pre-quals and it is a FHA, is there like a comment section that we can put in there to let the buyer, rather the seller, know that, hey, this is a really good buyer. We want to go on FHA because that's the best product out there? Or something like that. I don't know.
And I think you guys have seen this on my pre-approval and pre-quals that I give you. First of all, I pre-approve, I don't pre-qual, and so I give you that pre-approval letter saying we've passed the big hurdles, right? We've passed income, we've passed credit, we've passed the assets. The underwriters looked at them. But yes, on the PQF, the pre-qualification form Arizona requires, on the bottom, if they're a well-qualified borrower or they're pre-approved, I put in there, very well-qualified borrower, pre-approved, please call John Spur, so that the buyer's agent or the seller's agent knows where they're at.
Yeah, sometimes if you're competing for a house, as agents, we may call your lender and, we may have two offers that look fairly similar, and it comes down to which one of these buyers is better qualified. And when you have a lender that's proactive like that, producing a letter as well as the pre-qualification form available to talk on the phone and just kind of give you that confidence in the buyer that they are well qualified, it can make a difference.
Yeah, you can imagine.
You can put an escalation clause in that beats someone else's price. That's what we used to do. Today we don't have to, so why would you want to do that if you could just be the stronger buyer?
Right.
Correct. And you guys have heard me say it time and time again, I don't get paid until you get paid. And so my philosophy is we are absolutely a team. How do we get across the finish line? And, the less offers we have to write, the better for all of us, right? Just find the house they like and get them in it.
There's an emotional roller coaster you go on when you're in a market where you're writing several offers. You didn't get to do this, John McLean. You just picked the house and you won.
Yeah, exactly.
But yeah, there's an emotional roller coaster that goes with falling in love with this house and then writing the offer and then not getting the house and then you're heartbroken and then you're into the next offer. It's really stressful sometimes for a buyer.
And I've come in those scenarios where I'm the second lender. They've gone through this with a lender and maybe even another real estate team, and it doesn't make my job harder, but I have to win their confidence and say, look, you know what? We know how to do this. We know how to get it done. And there's a order of operations that need to be followed to get it done. But I've seen it. I've seen people that feel like they're just beat up and they don't want to buy a house, and having the right team makes a huge difference.
Yeah. Well, if you were in that market where it was so competitive and we were writing offers over asking price and competing with other buyers, this may be your time.
Yes.
I mean, having a good team behind you, having the right product when you're looking at your mortgage, it actually could be a great opportunity for people that have kind of stepped out of the market.
I encourage anybody that was looking in June, July, August, September, even October. I mean, rates hit 7.5%. It kicked a lot of people out. Rates are not at 7.5%. I can get you into mid-low fives, which is going to let you buy a lot more home. And you don't have lines of people bidding on houses. You don't have bidding wars. And there's definitely more inventory today. I don't know what the actual amount is, but I know inventory is up today than it was 6 months ago.
Yes.
So if you'd been looking 6 months ago and got discouraged, give us a shout.
How do they get a hold of you? So,
They can reach me on my cell phone at 520-247-3610, or you can reach me via email at Jon, at inspiredlifemortgage.com.
we usually do that at the end of the show, but you had a great conversation. I want to make sure that it wants right into the facts, how to get a hold of you.
One day I'll have your seat, Ray.
You showed me something on that.
Oh, goodness.
You know me, I'm good with it, man. I'll do something else. Life's good. I saw something on the internet that said, at the fastest rate in 15 years, 7 real estate analysts and economists break down how bad they think it's going to be. Tell me what you got to say to these Debbie Downers.
I'm tired of the clickbait, right? Negative media sells, negative news sells. I read that article top to finish, or top to bottom before I sent it to you. And the thing that is, I believe, completely left out of that is we have a lot of, I believe, realtors that are still not pricing homes correctly. And the price is too high, and so they have to bring that home down to get it in line. These guys that are writing the articles, all they're looking at is, list price dropped 2.5%. List price dropped 5%. Well, they're not. There's no way to account for how many of those properties were not listed correctly to begin with. And
Right.
I think you guys know that listing a property for the right price is significantly more important than, trying to get the biggest bang for the buck. And that article was unfortunate that it was sent out, because I don't believe anything about what they're saying in this Debbie Downer doomsday home values are going to plummet.
We still do have buyer demand. And that's something we have to consider. And maybe not all markets are, not maybe, all markets are not the same as our market. We still have a legitimate buyer demand. And I think that is going to, keep our market healthy, not crazy like it has been, but certainly keep it healthy. And we're looking forward to that. And we don't plan on taking any extended vacations here from what we're doing. We're all working, so.
I think the current rate environment of being in the mid fives is really going to help stabilize things.
Yeah, I think so too. And I think we're right where we started from. And it's the same thing that Sandra and I have always explained to people, that you got to start somewhere. Always start now, and then if it's not where you want, you're exactly where you were a month ago. But at least you're more informed, and that's what you guys do. You give the information, and then you're a much smarter buyer. You know what your buying power is, and then you can move forward.
Absolutely.
Hey, we'd like to thank Jon for coming on the show. This is Jon Spur. He is the owner of Inspired Life Mortgage. He is one of our key sponsors, so we're so glad to have him on the show. He's been helping us out, making sure that you guys get some great information as you move forward. So we'll look on the other side. On the other side, we're going to have Tiana Kennedy, who is Public Relations and Development Director of the GAP Ministry. I want to thank Jon for coming on the show, buddy.
Oh, it's fun as usual.
We'll see you on the other side.